you cannot time the bottom. You can, however, see the major opportunity for the future. And when you look at Bitcoin from that lens, the best store value in the long term, this has been the cheapest it's been for quite some time now. And you cannot appreciate the long-term strategy with 2 months of volatility.
And so when people say like, hey, they're going to blow up, I mean, you really got to take it a step further and be like, well, how? Tell me, run the numbers and tell me how. And what you'll find is that, unless Bitcoin does a historically catastrophic bear market in both severity and length, only then will they start to come under pressure.
It's an appreciating acquisition strategy. I don't see how you can lose if you believe in the fundamental principles of Bitcoin.
Hello, everybody. Tyler Rowe here with the Bitcoin Treasuries.net Roundtable. I'm joined by Alexandre Laizet today of Capital B and Sam Callahan from Oranje BTC. How are you guys doing today? Sam, put us up first. How's it going?
Great. Thanks for having me back on. Appreciate it. Alex, good to see you again. Yeah, things are going well, honestly. I think it's just typical bear market sentiment and price action, and there's a lot of infighting that typically happens in bear markets. But in general, I think I'm still seeing good fundamentals and just the builders keep building. Nothing's changed with the broader macro picture as to why you wouldn't want to hold a asset that can't be debased, that kind of functions outside the debt-based system. And so everything just is trucking along as normal, because this is just what I expect with Bitcoin's volatility profile.
Totally. We're sitting below 61K at the time we're streaming here. Of course, last I checked here, Stretch was trading in the mid to low 80s. I think it tagged $84 today. It looks like SATA's dislocated a little bit as well. On the back of their daily dividend launch last week, they're trading around $91 in the market. Of course, those two products have a $100 peg. Alex, we talked about this dislocation and how digital credit is trading. Do you have an updated look on that? Is this just another buying opportunity for the bulls to get a higher effective yield? And what do you think's driving the price of dislocations?
Yeah, so, well, first of all, I'm very glad to have landed to the United States of America. So it's really nice to see such a vibrant and thriving economy, and a lot of growth in my view as a prospect for the US. And I think we are in the depth of the Bitcoin bear market. You have a lot of signs that are very much similar to the ones that we had in the past bear market in the 2022, 2023. A lot of feelings of capitulation events, a lot of lack of conviction that you can see across many different investors that are starting to abandon because they thought that this was going to go up forever, and it's going up forever, but in a different time horizon. And so when you look at the different cycles, bear market typically lasts 1.5 or 2 years. We are at basically 9 months. It doesn't mean necessarily that you have a lot more price pain, but you do have more potential time pain. And we have definitely reached the 200-week moving average of Bitcoin. Historically, this has only gone up and to the right. You've had certain periods where the price has gone slightly down from the 200-week moving average, but typically it's a great support. It's also where half of the market is in profit, half of the market is in loss. The ones that are in loss can definitely suffer a bit, but can continue to accumulate. And the ones in profit are seeing prices that they had not seen in a while, and they also start to accumulate. And I think we are in the time pain part of the cycle. And in that part of the cycle, typically what's missing is consensus on the emergence of a new bull market. You cannot tell when was the bottom until you have seen a significant growth from a bottoming zone. And I think we are around the bottoming zone for Bitcoin. It can go slightly down or up. We don't know. You cannot time the bottom. You can, however, see the major opportunity for the future. And when you look at Bitcoin from that lens, the best store value in the long term, this has been the cheapest it's been for quite some time now. So when it comes to the digital credit industry, my view is that this is a nascent industry. It's a 1 year industry. You have products that like SATA that are even less than 1 year, and you cannot judge the development of products after 1 year. And even if you take only 1 year, the growth has been exceptional. It's been, the birth of an 10 plus billion asset class in a matter of 10 months, basically. And this is really unprecedented in the history of credit markets. And the fact that those instruments are showing a 15% volatility from the par to about 85 to 95 range really shows that, yes, there is a risk that investors should appreciate when they invest in securities in general. But at the same time, Bitcoin is down 50%. Those digital credit securities are down 10 to 15%. And this shows that they are indeed absorbing Bitcoin volatility, not all of it, but part of it. And
I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-Treasury to connect with their team.
It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wish for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
my view is that a lot of that slowdown in terms of the par, reaching the par, is really due to the overall Bitcoin market fluctuation. And as well, of course, the appreciation of the market of the cash reserves and the different time horizons that different companies have when it comes to their leverage ratios and their long-term instruments. But my view is that those instruments are completely misunderstood yet. The market still doesn't fully appreciate the over-collateralization of those Bitcoin-backed credit perpetual instruments. The market doesn't really appreciate the perpetual nature of those products. It seems like it's pricing those instruments as if they were typical Lombard loans where you would have a liquidation event, while there is no liquidation event for strategy and strive at any specific price of Bitcoin. Of course, you have more risk as Bitcoin price goes down, but we are speaking of tens and tens of years of coverage, and this is much better than the traditional credit product. So my view is that only 1% of the market understands yet that asset class, and that we will be in a 3 to 5 year period of adoption of those instruments, and we will trade back to par in general if those companies continue to manage things conservatively, which they are doing, in my view. And you also have definitely the factor of Bitcoin itself. The destiny of Bitcoin Treasury company is linked to Bitcoin, and the credit appreciation of the Bitcoin-backed product that those companies issue are also linked to Bitcoin. And that's, of course, the risk that investor may appreciate, but that's also the major opportunity. And if you're a Bitcoin bull, then the thesis is that those instruments are designed to be targeted to trade around par. And so this is, as you said, Tyler, effectively just a higher effective rate for a Bitcoin-based investor. And I'm very bullish on the sector, on the Bitcoin treasury companies, of course, and on digital credit as the fastest growing credit sector in the world.
Yeah, can I just add on to some of what Alex just said? I think Stretch is not even a year old. I think it turns 1 in July. And so they are still young, novel instruments, and the market's still wrapping its head around, what it means to have a perpetual preferred equity product that's supported by a large Bitcoin balance sheet. I think part of the volatility that you see in those instruments is just a lack of market understanding around them, but also a lack of appreciation of the Bitcoin that backs it. So there's mispricing of the Bitcoin risk still. They still have over $50 billion worth of Bitcoin, even when Bitcoin's dropped 50% off its all-time highs. They still have 40 years of dividend coverage with their USD reserve. I think part of the weakness in Stretch, when it started to break below par, was when they retired the convertible debt with some of the USD reserve. Which is ironic because by doing that, they actually improve the credit worthiness of every junior security below it and the common equity when they retired some of that convertible debt. But the market saw it as, hey, they don't have as big of a USD reserve to support it. And I think that's a lack of appreciation for how much Bitcoin they have to support it, as well as actually what they were trying to do there in terms of actually helping the common equity as well as the preferreds by removing that senior obligation. But the market didn't really see it that way at first. And then it's obvious that there's a little bit of there's some leverage going on. There was some DeFi products, but there wasn't much liquidation there. I think it was actually more in the traditional financial system where there was some leverage where people were borrowing at whatever rates and then turning around and buying Stretch, buying Stretch with margin, doing a carry trade, not managing their risk properly. And you can kind of see that because they all had the same kind of liquidation level. Like maybe they expected Stretch to maybe break down to the low 90s, but they weren't modeling out breaking below that. And you see this kind of liquidation event, this kind of cascade happen where it kind of broke around 90 and then it dropped all the way down to 82. And I think it's because they all kind of had the same levels. There was this cascading event, but it's actually more in the traditional financial system rather than, say, DeFi. And that's just what happens when you have something that people perceive as stable, and then they add too much leverage. They don't risk manage properly, and then you get these cascading liquidation events. But it's important to understand that it doesn't change the credit quality of these products, and that's really they are perpetual equity. But you should really view them through a credit lens. Look at, how much dividend coverage do they have? What's the seniority of the claims above it? What's the liquidity profile? And so when you look at it through that, really, this is an opportunity. If you believe in their ability to service the dividend, you should be loving this effective yield. That's a 13.7%. There's a market incentive now. And when you actually run the numbers, I have no doubt that they're going to continue servicing the dividend. They have a very, very strong balance sheet, and they've already shown that they have access to capital markets, even in these challenging market conditions. Michael came out, they raised $300 million to top back up that USD reserve, which kind of supports the credit. They said they're going to continue to do that. They continue to buy Bitcoin. Strive continues to buy Bitcoin with SATA. And so I think there's kind of an over-exaggeration of the volatility profile with these new instruments. And I think from here, you're going to look at this event and say that it was a stress test for how strong the capital structure and the support of these instruments are. And I think there's just still like a really misunderstanding of the risk profile of the instruments. Saylor shared a video from 2022 when their capital structure was very different. They had senior secured loan. Bitcoin was down 80%. The market was very different back then. And he was given a speech at the depths of that bear market. And I think he shared that to share like, hey, we're resilient. We've been through worse than today. And our capital structure is more robust today than it was back then. As Alex was mentioning, these instruments don't have, liquidation thresholds or margin requirements, and they don't have a maturity date. You don't have to pay back the principal. They don't have a default mechanism. And so when people say like, hey, they're going to blow up, I mean, you really got to take it a step further and be like, well, how? Tell me, run the numbers and tell me how. And what you'll find is that, unless Bitcoin does a historically catastrophic bear market in both severity and length, only then will they start to come under pressure. And so like, that's why people say, if you're bearish on strategy, you're kind of bearish on Bitcoin over the next 5 to 10 years. And because really when it comes down to it is Bitcoin's future CAGR going to outperform the cost of the dividends that they're trying to service if they're turning around and buying Bitcoin? And so I think it's, they're kind of building for the next several decades. I think people are focused on every single transaction. Is it accreted to common? Is it not? When really it's more complex in what they're trying to do. They're trying to build a Bitcoin accumulation machine for the long term that's durable, that can survive Bitcoin short-term volatility and be able to acquire Bitcoin in all market conditions in an accretive way. And it's not going to be this like perfect smooth path to get there. Every single transaction is towards this one long-term goal, is to build the most resilient capital structure to do that. And so I think people are kind of narrow-minded of how they're kind of analyzing this. And they have to analyze the entire capital structure and understand that each decision that they make is multifaceted, and think about their long-term goals and not just every single quarter-to-quarter transaction or every single transaction or analyzing every single quarter. They're long-term thinkers, and that's, I think, the best way to analyze it.
Yeah. I think we've, Twitter for sure, but even investors, as reflected in the common share price, react so. There's just so many knee-jerk reactions with strategy. I've never seen, an equity really behave this way. I'm sure there's some other examples out there, in the broader market, but to see, Saylor sell 32 Bitcoin, just a tiny fraction of the stack, and then to see it digested so poorly by the market, the narratives flip, and like you said, that strategy retiring some convertible debt early, and shortening the runway on that USD reserve. It seems like I was so surprised that the market reacted negatively to that.
Yeah, I don't think we would even be really talking about it if Bitcoin didn't fall right after they did it. I mean,
Right.
if Bitcoin was
Fair enough.
up 20% after they retired some of the convert, like literally, I don't think people would even be talking about it. So,
Yeah. Yeah.
it's just, you can't really time Bitcoin's short-term price action. So they did it right afterwards. Bitcoin dropped down, and it caused a lot of debate around whether they should have done it now, why they did it now. But again, if Bitcoin jumped 25%, I don't think that, there would be much debate around it.
Yeah, and you mentioned the long-term outlook, like the goal is to acquire more and more Bitcoin, per share, accrete shareholder value over the long run, right? It's not even a quarter-to-quarter decision. You've got to zoom out and look at the, 10-year, 20-year time horizon, Sam. How do you manage that? When you're running, like if you're in Sailor's shoes or running, another Bitcoin treasury company, like you guys, work Orange BTC, Capital B. How do you think through that when you're managing a company's communications, you're managing the Bitcoin strategy? Um, how do you I guess marry the communication you have to the market, so that investors are aligned on the long term view, balancing that with the short term news that comes with being associated with this wild child that is Bitcoin.
Yeah, my view is you have to look at the key learnings of from coming from the market. The market is telling that it appreciates a cash reserve in the line of 1.5 to 2 years or more. It appreciates that you would have a digital credit strategy as well. We forget very fast because every time Bitcoin goes down by 20%, everyone is focused on the price of Bitcoin going down and why the price of STRC and SATA is going down. But we cannot forget that 2, 3 months ago, we've had billions and billions of dollars being raised with digital credit, and that this was quite significant, and that even on the equity side, this has been quite significant. But those are Bitcoin treasury companies. They are based on Bitcoin. And yes, there is some volatility related to that. Another element, in my view, is the sophistication that is increasing in order to deliver a simple product. There is a sophisticated strategy, a sophisticated set of tools that a Bitcoin treasury company can use. And when Michael talks about the different types of MNAV that you have to analyze to fully appreciate the accretiveness of transactions, when, of course, strategy is looking at retiring some converts, when they are buying on one side Bitcoin and buying back some debt and acquiring some cash. All of this is towards their objective of strengthening the digital credit business. And strengthening a business doesn't typically take 1 week or 2 weeks. Sometimes you have to go through some structuration. And I think what matters there is the architecture of the digital credit business is very important, and the longevity and structure and aligned with Bitcoin price going up over time is important, and also the robustness in case of Bitcoin price going down is important too. And so all of these things show that strategy and Strive have different tools that they can use to make sure that the digital credit business is the perpetual business that is intended, and that it works over the long run. What matters is the long run. You can have periods of times of high volatility, slightly more leverage. And what mattered in the video of Michael Saylor of 2022 was that, he literally said, thank you to the ones who believed, who endured. And I think the term believe sometimes is a bit misunderstood. It seems like you would have to trust someone without looking at the analysis. In fact, what is meaning in reality is the people that have conducted their own analysis have built a conviction, have seen a future, have a vision on the future, and have the courage to put the structures of the financial structure of the company aligned with that future. If you don't believe in Bitcoin, you don't touch a Bitcoin treasury company, you don't touch digital credit. But if you believe in Bitcoin, the most rational thing to do for a corporation is to issue Bitcoin-backed credit with the longest time horizon, a perpetual one being, of course, the most aligned with the perpetual holding objective of the company. And then you can get into the risks, but then there is all of these discussions online on the risk of digital credit and the risk of having to sell Bitcoin to pay the obligations over time. And the reality is that this is showing that there is no upside potential without risk. And the risk is known. If Bitcoin keeps going down 80% per year for 10 years, this will be bad for digital credit. But the point is, we believe in the long-term growth of Bitcoin as the best store of value. And we believe in a growth rate that could be largely higher than the points of interest or dividend of STRC and SATA. And then the equity shareholders typically have that view as well. And I think that's a bit forgotten that it's also exactly in those periods, in those bear markets, that those decisions aligned with the long-term trajectory of Bitcoin with a perpetual nature are the ones that will be the most valuable when you get into the next potential bull market that we can anticipate. So that's a long-term view, and that's a long-term strategy. And you cannot appreciate the long-term strategy with 2 months of volatility.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at BitGo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin treasury, there's a Coldcard for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The tip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
I mean, I would just add, I mean, as a company, as a public company, you have a duty to shareholders, but you have to, and there's a tendency really since like the 80s and 90s to just focus on quarter to quarter earnings, and that's like problematic. Actually, they're like moving away. They're trying to move away from that right now. They're trying to change that to like semi-annually because it caused all these like bad incentives, short-term thinking. I think Saylor and Strategy said something along the lines of like with Bitcoin, it should be a long duration asset. You should think in like 5 years at least at the minimum. And if you're investing in the equity of a treasury company, it should actually be like longer even. And so you should really be thinking about not just per transaction. You should think about like how does this corporate action put us in a better position long term to be the largest Bitcoin treasury company, the most efficient, and a way to accumulate Bitcoin over time. And so it's just about communication. Like, even if they decide to sell Bitcoin, just be upfront about it. Here's why we did it, X, Y, Z. And because it's not going to just be always straightforward. I mean, even like selling Bitcoin, I actually have zero problem with strategies selling some Bitcoin when they think it's the right move for their shareholders, because it's a monetizable asset. It's liquid. They have $50 billion plus of it. And if they're net accumulators, like for instance, in Q1, I think they acquired almost 90,000 Bitcoin, and if they have to sell some Bitcoin to service the dividends, and you look at their annual dividend obligations, they could sell around 25,000 or so, depending on Bitcoin's price, to cover a year's worth of dividend obligations. And they're still, netting out. They still bought whatever, like 65,000 Bitcoin last quarter. It's like, what are we even talking about here? Because it's their balance sheet. They can do whatever they want with it. They have to balance, supporting Bitcoin, the underlying asset, as well as their pref shareholders, as well as their common equity shareholders. And they have these different levers, and the optionality that they have with their treasury operations, I think, is really underappreciated. And, if they think that selling some Bitcoin is the right move, then it's their choice. They can do that. It's not, I don't see any problem with that whatsoever, as long as they continue to be net buyers over the long term. This is why, the freaking out about, oh, he sold 32 Bitcoin. I wouldn't even care if it was even higher, if they felt like that was the right move, to build back up their USD reserve, to buy back their stock if it was selling at a discount, to buy back STRC if they think that's the right move. It's their choice. And so I think when you're a shareholder of any of these treasury companies, it's just important to understand that you're working towards a long-term goal. And if you measure every single transaction, is this accretive? I would zoom out and be like, well, they still have a BTC yield in double digits, in the last quarter and over the last year. And they think that selling some Bitcoin here or issuing some MSTR here is really important for the strategy right now, in order to us to accumulate even more Bitcoin into the future. And so I think that's the best way to look at it. And from somebody at one of these treasury companies, is just about having really clear communication. And I think Strategy has been extremely transparent as a public company with the frequency of their filings, obviously their entire analytics dashboard where everything's right there. You can run the model. They've open source models. They go on long form podcasts. Their earnings calls are long and in depth compared to other public companies. I mean, I think they've been quite transparent about what these products are, what the risks are. Shareholders just have to go in and read the filings and do the work and run the numbers themselves, so that they understand the risks before they allocate to any of these Bitcoin backed securities, because that's just a general recommendation. I mean, they should do the work. I think they've been transparent. They provided all the information for investors to learn about it. I think they've even been transparent about, whenever there's a yield involved, or whenever there's anything that has counterparty risk, you're adding additional risks compared to holding Bitcoin in self-custody. It's a different, they're different buckets. And if you are, you want to prioritize long-term savings, and you want censorship resistance, you want no counterparty risks, holding Bitcoin in self-custody is the right asset. If you want to try to outperform spot Bitcoin by gaining access to an equity that could accumulate more Bitcoin faster in a creative way, and could potentially outperform Bitcoin, then that's the right allocation for you if you're long duration there. If you want short duration and lower volatility and some monthly income, then a Bitcoin-backed credit product like Stretch or SATA is the right instrument for you there. So it's just providing better investor access to fill different buckets and different needs. And I think that's what people kind of miss. I don't really see them competing with one another.
Yeah, I think the like open sourcing the data is something that's been great to see. Like I've got the dashboard up here for Oranje, and yeah, it's just really cool to see the constant live data that's available from Bitcoin Treasury companies. I think Michael Saylor and the squad there were really key towards making that kind of a standard for these types of companies. Of course, Capital B's got their dashboard as well, and I love just like this is info that you just don't see anywhere else in the marketplace, right? With other companies. Part of it's the nature of, a Bitcoin treasury company that's a balance sheet company, and trying to accumulate so much Bitcoin. But yeah, it's the real-time feedback can be a double-edged sword, like you said, Sam, with these short time horizons that we look at, quarter to quarter and reacting to news. I'm curious, like, how you balance, again, the transparency, open sourcing the playbook, having that communication with the long time horizon. Is it just messaging and really cementing this is the playbook, this is what we're trying to achieve?
Yeah, pretty much. I mean, nothing really changed. I mean, these companies, they just continue to do what they've set out to do. I mean, I think they've actually held up quite well. They continue to purchase Bitcoin. Um, they continue to have access to capital markets. The liquidity has improved in all these products. The volatility profile has improved over time. I mean, there's been like 2 or 3 of these blips when Bitcoin's come under pressure where they've started to break below par. Each time they've recovered and come back to par. And I think that's going to happen here as well, because honestly, the only thing you should care about as a holder of Stretch or SATA is, are they able to service the dividend? And again, when you run the numbers, they will. I mean, they will for a long, long time, given the how much USD reserve they have, as well as the size of their Bitcoin balance sheets supporting these instruments. So that's the only thing you should really care about. So like I think months from now, I don't know how long it's going to take. Like with these liquidation events, sometimes there's sentiment changes and it takes a little time to build up more confidence as they continue to service the dividend. I think it'll creep back up to par. It could also just kind of snap back as people kind of run the numbers and they're like, okay, but they're going to continue to service these dividends. And now with SATA, I mean, every single day they can prove we paid the dividend, and they're going to do that every single day. You're going to see it every business day. And so I think it's really a juicy yield, effective yield right now for anybody who's run the numbers of the instruments. And I think it's really, again, I think you're going to look back and it's just a stress test. So the hardest part about Bitcoin short-term volatility for Bitcoiners, I've said this before, it's not really like the price on paper changing and whatever the size of the balance sheet changing with Bitcoin short-term volatility. It's really the high time preference of the fiat world influencing everything. Everybody's high time preference, everybody's thinking short term. But that's not the case in these Bitcoin treasury companies, and that's not the case with many Bitcoiners. We think long term, and so it's just kind of the nature of the world we live in. But the data's there. They can track. There's nothing really to hide, so it's nothing opaque about these companies and what they're doing. I mean, it's hard for you to say that there's been anything but transparency with how this industry has emerged.
Yeah, I think it's going to be funny to watch, because one of the narratives that you touched on, Sam, earlier was, strategy took its runway from, a year of dividend coverage in cash to, I think it was 7 months, at the low point. They're already up to about 10 months of runway. So like they're going to be able to replenish that reserve so quickly, the way they've been able to raise capital this year, that's going to put that narrative to bed. Speaking of the, kind of high time preference behavior, Dick Payton's joining us from BitGo, and an advisor to Oranje. Thanks for popping in. We've just been talking shop on STRC, SATA, and Bitcoin treasuries, and there's been narratives out there. I've talked with Alex on the show, from Bitcoiners who, I don't know, not to put someone on the spot, but I'll read a tweet from Odell here just recently. I love the guy. He's been on the pod.
Not sharing my screen.
Huge fan of him, but he said, never put yourself in a situation where you need Bitcoin price to go up in the short term. That's how you get wrecked. Nothing to disagree with there. Bitcoin accumulation is a long-term game of survival. Nobody can do it for you. Stack real Bitcoin, not that big shit. So I think that's a subtweet, about Bitcoin treasury companies, the way he's talked a little bit about that. That's just I think a lot of Bitcoin, um, I don't even know how to label it, but people have been around Bitcoin a long time. Purists, which I mean, we're Bitcoin purists as well. Like we think Bitcoin's the best asset. We just think Bitcoin treasury companies, are a great vehicle to amplify that exposure and attack capital markets. Where do you think the disconnect might be, Nick? From maybe some of the narrative online that's coming through and critical of Bitcoin treasury companies, um, you know, doing something that's maybe a sort of synthetic Bitcoin model, or urging investors to stay away from Bitcoin treasury companies. Why do you think that tension exists?
I guess I'll go back to the challenge that we had maybe 5, 10 years ago, where people just don't understand the value proposition that is Bitcoin. And if you don't believe that it's going to appreciate over the long term, then I could see how you're a doubter of a treasury company. But like, let's remove Bitcoin for a second. Let's just say these treasury companies, or let's just call them startups that have dreams of becoming future banks or infrastructure for the financial system. Let's just say that's what they are. And they were raising dollars and just stacking them on their balance sheet to eventually get large enough to eventually release products as a traditional bank. Would anyone be saying this? I don't think so. And so call them treasury companies, call them whatever you want. At the end of the day, they're improving their balance sheet with what I believe all four of us agree on is the hardest asset that you can possibly have on your balance sheet. Excuse me, for the long term. But it's important what Sam said, which is you have to always keep the low time preference. If your goal is to, get a bunch of Bitcoin on the balance sheet and play weird leverage games and like Fugazi products and do it underneath, maybe you raise that capital with really bad terms because you just took easy money coming to you. Like that's how you can get in trouble. But if you're just stacking Bitcoin, you're continuing like an Orange, like continuing to stack, month over month, week over week. BitGo does the same thing every year. Our Bitcoin balance sheet goes up. Sometimes we use it for operational expenses, but then we'll add to it, et cetera. But it's an appreciating acquisition strategy. I don't see how you can lose if you believe in the fundamental principles of Bitcoin, and that's the key. And it's related to Stretch too. For those that are doubting Stretch, it's like, well, in my opinion, what is it? He has enough to pay dividends for 32 years that Bitcoin remains flat from here. I think Jesse Myers did an analysis on that recently. And then if Bitcoin does a 2% CAGR, they have enough on their balance sheet to pay it indefinitely. So it just really goes back to your belief and education around Bitcoin. And so I understand the hate, but in my opinion, it comes from a really misunderstood place.
I thought about this, and the best way to summarize this is the different categorizations that Michael Saylor has put out in terms of the maximalist, the capitalist, technologist, and fundamentalist. Everybody is on the same mission. We all want Bitcoin to succeed. We are all working towards more Bitcoin adoption. And it is needed that some in the Bitcoin industry focus on grassroots Bitcoin, direct ownership, self-custody, censorship resistance, Bitcoin adoption, and merchant adoption, and so on. This is the foundations of Bitcoin from an individual standpoint. But you cannot live thinking that corporations don't exist and that the financial system doesn't exist. You cannot say that corporations have no reason to exist on a Bitcoin standard. In fact, corporations have been there all the way, and it is as rational for a corporation as it is for an individual to stay humble and stack sats. And that's exactly what we are doing. And what we think is that the adoption of Bitcoin is inevitable, that it is the best technology for savings, for capital. And there is that debate of digital capital versus money. And the point is, the first element of money is the store of value. And a long-term store of value is capital. So it is exactly because Bitcoin is digital capital that it can be money under Austrian perspective. So there is no contradiction at all. There are just different terms that are employed by different people with different objectives. If the main objective that you have as an individual is to be self-sovereign and don't interact at all with the fiat system, then yes, the self-custody and the payment grassroots adoption is definitely the way. And at the same time, this is not contradictory to the value added by more Bitcoin adoption within the fiat system, because it is much better for Bitcoiners all around the world that they are not treated as criminals, but they are as valued as an individual with their assets as if they had other types of assets. And all of the work of the ETFs and the Bitcoin treasury companies and the banks to provide more Bitcoin custody options, more Bitcoin on and off ramp options, more Bitcoin collateralized loan options, or more Bitcoin levered equity exposure options in the market are just more options for Bitcoiners. And this, in my view, contributes to the adoption of Bitcoin. And that's what matters. So I don't get why there is not an abundant mentality for everybody, because at the end of the day, the percentage of people willing to self-custody is in the range of maybe 1 to 5%. And you have to address the 95 to 99%. And if this brings more economic power into the Bitcoin network, more demand into the Bitcoin network, this will strengthen the self-custody part of Bitcoin, because it will increase the purchasing power of Bitcoiners all around the world. So my view is that over time, as Bitcoin price goes up, Bitcoin treasury companies will be more valued, and it's fine. It's as always, there are more people coming in when the Bitcoin price goes up than when the Bitcoin price is down, and it's much easier to critique Bitcoin treasury companies when Bitcoin price is down. I didn't hear those critics when the Bitcoin price was up, by the way. So it's kind of funny how high time preference work. In fact, if you want Bitcoin to succeed, you should be happy that people running Bitcoin treasury companies are Bitcoin maximalists. They care about Bitcoin. It could be different. In fact, one shareholder told us something that was quite funny, is that this bear market has separated the boys from the men. You can really see the Bitcoin treasury companies that are sticking with their accumulation strategy, with their Bitcoin maximalist principles. And we are very lucky to have Michael, Fong, and Strategy as leaders of that industry, because they are Bitcoin maximalists at the head of the largest Bitcoin corporate holders in public market. And they are, in fact, running a Bitcoin business, and they are turning dollars into Bitcoin, which is the sensible thing to do. And I think all of this is very positive, and Matt is contributing to the Bitcoin ecosystem through private Bitcoin equity, and Michael and us, to a more modest extent, are contributing to the adoption of Bitcoin through public Bitcoin equity. And I think both are worth working all together on the same trajectory.
Look, I have a ton of respect for Odell, and I mean, him and Marty's podcast was one of the first podcasts that I came across way back in the day, and they've taught me a lot. But I would push back on, like, he's right. Like, you shouldn't put yourself in a position where you need Bitcoin's price to go up in the short term. That's how people get blown up. That's not what a lot of these treasury companies have done. Actually, the opposite. A lot of their debt's long dated. The perpetual preferreds don't have a maturity date. and they don't have a default mechanism. And so it's actually the opposite. They're trying to structure it to not be exposed to Bitcoin's price in the short term. And anyone that didn't do that is paying for that. It's about managing risk. Ultimately, when you're sitting in my seat or other people in my seat, you're thinking about the downside risk more than anything, and appreciating Bitcoin short-term volatility on both the upside and the downside. Like that's, you have to appreciate that and just understand it's a part of the profile of the asset due to its fixed supply and the fluctuating demand that occurs through different adoption waves of the market asymmetry that exists, information asymmetry that exists today. We're in price discovery mode. But the reality is that I think you have this divisiveness right now is because I feel like Odell and others think that the quote unquote orange ties are kind of benefiting off the back of people actually building on real Bitcoin. And I think that's wrong. I think that's like a function of not appreciating what strategy in these Bitcoin treasury companies are doing, trying to unlock pools of capital and get more people into Bitcoin products that are supported by Bitcoin, that leads to more demand for Bitcoin, which improves the fiat price of Bitcoin, which is important for incentivizing miners, just bringing more adoption, more demand for Bitcoin in general from different areas of the financial market that necessarily won't be holding spot Bitcoin in self-custody, at least not for the next decades. Just how the architecture of the financial system is today. It's just a reality. So you're trying to just get more people into the Bitcoin funnel through these products. And so you are helping Bitcoin in that way. Now, I think Bitcoin treasury companies as well have to understand that if Bitcoin is going to appreciate at this 25, 30, 35% CAGR over the next 10 years plus, we also need Bitcoin to function as money. It needs to be adopted in self-custody in a peer-to-peer fashion. It needs to remain decentralized. It's key to its value proposition. And so I think maybe some of the pushback from the community is that they want maybe some more balanced narrative between the treasury companies. Maybe they want more Bitcoin education, because a lot of my time is still spent teaching people about Bitcoin, not necessarily what we're building on Orange BTC, but Bitcoin. We also partner with Vintium, which is a Bitcoin core developer nonprofit, trying to support Bitcoin as money. I think it's all accretive for Bitcoin. I think what Jack Dorsey focusing on payments, Michael trying to unlock the $300 trillion fixed income market, it's all accretive for Bitcoin. But I think maybe they want to see a little bit more balance in terms of the messaging around like teaching people about Bitcoin as well as the digital credit products and the other things, which, I mean, you can agree with that. You might not. But I think that's kind of part of the pushback. I think they want people to understand that if Bitcoin is going to succeed in a way that the treasury companies are projecting it to succeed in terms of the CAGR, it also needs to be adopted in self-custody. And so, it's why we have initiatives at Orange BTC where we're kind of trying to support Bitcoin in every way. Because I'm an Austrian, I believe in Austrian economics. That's how I view things. And I think Bitcoin is money. Now, Michael made it very clear in his slide at BTC Prague why he's saying digital capital and why he's saying he's basically trying to speak in the language of the Keynesians to try to make them understand where Bitcoin kind of fits in their mindsets of how they frame things, not in the Austrian lens. But I think Bitcoin is money. Everything else is credit. And I think Bitcoin needs to be adopted as a store of value, as a unit of exchange, any unit of count over the next, 50 plus years. And we're in this very early stage of Bitcoin's journey, but all of these efforts help drive Bitcoin adoption. And that's where I just disagree with some of the antagonistic behavior against people who are just building on Bitcoin. Like, I would just focus your attention on central bankers, on governments that are highly indebted, debasing the currencies, and companies that are driving more adoption for the system that has really poor incentives, instead of companies that are buying Bitcoin, building Bitcoin products, building Bitcoin services, instead of attacking those companies, I think you should focus your attention elsewhere. That's just how I feel about it.
I would like to add just one thing, which I think is in fact the reality at play. My view is that this is not really a debate on philosophical elements around institutional adoption and so on. I think, in fact, there is competition in the Bitcoin market. When my understanding is that 1031 is invested in Strike, and that Strike provides Bitcoin-backed loans, lines of credit, and Strategy is in fact providing for MSTR shareholders the possibility to have more Bitcoin per share over time with the access to capital markets to a form of Bitcoin-backed line of financing with no liquidation risk. And today, Strike, for example, and not pointing one specific company, but Strike, for example, is offering Bitcoin-backed loans. And you have a choice as an individual investor between being a strategy investor, a strategy shareholder, and benefiting from more Bitcoin per share, and having the company do that for you with the access to capital markets, with the access to the digital credit markets, with tens of billions of dollars being raised in short order, with no liquidation risk. And on the other side, you have options in the market to take Bitcoin-backed loans, and as an individual shareholder, the advantage is that you are not exposed to a security. You don't have that counterparty risk, but you do have certain collateralizations ratios, 50%, for example. You do have like 7 to 11% interest rates to pay. And so, in fact, you have different options to get more Bitcoin on your Bitcoin. And some investors are choosing to be shareholders of a Bitcoin treasury company that has access to capital markets. Some other investors are choosing to put their Bitcoin as collateral on platforms like Strike to have a Bitcoin-backed loan. And both have different risk return profiles. But I think the point is, instead of criticizing the other company, because I've not heard any Bitcoin treasury company criticize what Strike or other companies are doing with lines of credit to their investors. I've not heard anyone say that the investors in the Bitcoin-backed private credit instrument, the Bitcoin-backed loans that Strike, for example, provides, I've not heard that those investors are not correct in their long-term view. Well, the MSTR shareholders are very close to that view. They just take the view that Bitcoin is going up, and that access to capital markets with digital credit is a way to get more Bitcoin on their Bitcoin with no liquidation risk. And there is that competition in the market, and it seems like one group is criticizing the other for taking some of that business, while the other group is focused on amplifying the number of people that can access that business in the fiat world. And yes, the fiat world is much larger than the Bitcoin world today. And my view is that, in fact, they are not targeting the same types of investors, and that instead of trying to see who takes which part of the Bitcoin credit market as it is today, we should all work together into expanding that market size over time, and more demand for Strike's Bitcoin-backed loans is good for Bitcoin, and more demand for digital credit and for Bitcoin digital equity in capital market is also good for Bitcoin. So I hope we can get out of that tension, because in fact we are not really competing, we are collaborating for more Bitcoin adoption. And I hope we can remove those critics and be straightforward with competition.
A lot of great points all around, and that's part of it. Is like, this is like a real big narrative change where the financialization, institutionalization narrative has really taken hold in Bitcoin. So, I can understand, some of the critics within the Bitcoin community are, taking this posture. Sorry, I stepped on you there, Nick.
Oh, no, I was agreeing with Alex, in general. I think that's a good point. Is like, naturally more companies are coming on board in that space, there's a natural competition. One other thing too that's interesting is I know, not to get too philosophical, but Bitcoin started out as this like cypherpunk movement. It was kind of like the retail, the little guy or girl against like institutions who have failed us for so long. And I wonder if like some of that's coming out. You hear about like why is America kind of like a little crazy sometimes, and it's because we were born from like a revolution. Like you hear that talking point sometimes. I wonder if the same is true of Bitcoin sometimes. And there's been a lot of bad actors on the institutional level in the early years. We know who those people are, like a Celsius or an FTX or whatever. And so sometimes I wonder if the individual, there's the competition piece that Alex said for sure. I think that's valid. But then I think sometimes the natural ideology of Bitcoiners is to just think that of the companies and institutions, even if they're doing right by the community, which I agree with Sam. Like I think that's exactly what's happening with the serious companies in the space. I just think there's this natural angst, or they develop this opposition to companies that are doing this. But if you comb through how they've raised the money, if you comb through what's going on under the hood, you see there's nothing wrong here. As long as they're not over leveraging or raising bad debt, it's all in a great place. Capital B included, Oranje included, and others. And so sometimes I think this is a natural thing as we kind of Bitcoin gets its tentacles into more of the traditional financial markets. Agree, it has to become money, all those things. I think this is just natural friction that occurs, and over the long tail, I think this is all good for Bitcoin. It's bringing more products online, like Sam said, and I'm very excited because I feel like even though this last bull market, I feel like retail hasn't really come in like they have in past, with all these new products coming online, with a lot of regulation passing, with obviously the U.S. government is getting ready to announce more additions to their strategic Bitcoin reserve. The signs are clear that things are looking good in both the near and short and long term.
Yeah, we need both to succeed. In fact, you need to have the grassroots Bitcoin self-custody adoption to succeed. You need to have the Bitcoin private businesses to succeed. You need Strike to succeed, and you also need public companies adopting Bitcoin to succeed. Bitcoin doesn't need it, but as in general, for Bitcoin adoption, I think both are very positive. Sam, sorry I cut you.
No, I just, with the Strike Bitcoin backed loans, I guess I kind of see it a little bit differently. I think having more options available in the marketplace is a good thing. And I don't know how much those are competing against digital credit. 'Cause if you just think about like, why would somebody use a Bitcoin backed loan? Well, they either need liquidity and they don't want to sell the Bitcoin, the spot Bitcoin, or they're trying to leverage up to buy more Bitcoin, which, to Alex's point, that's when people can get into trouble if they're borrowing against their Bitcoin, just turning around and buying more Bitcoin. There's a lot of volatility there. I've seen people get blown out a lot, and they're, quite frankly, it's still expensive. It's not an efficient market yet. I think that's going to improve over time. But the other is just to avoid capital gains tax and just borrow against their Bitcoin holdings. They don't have to pay the taxes. They have liquidity needs. They pay down the loan, and it's good to go. I think people that are investing in digital credit are going to have different needs. They kind of just don't want Bitcoin short-term volatility. They need this like short duration bucket for their, future house payment, like they're putting a down payment on in the next 2 months. Maybe they have to pay college tuition in the next couple months. They're a Bitcoiner, but they can't, with that bucket of capital, they can't afford Bitcoin's volatility, to fall 20% over the last month as they're preparing for a major, payment like that or something. So I just think they're like different cohorts of investors, and they're serving different needs. And I don't know. I mean, Alex, maybe you can illuminate me more about how you see
Yeah, I didn't compare the digital credit investor with the Bitcoin backed loan investor. I compared the Bitcoin-backed loan investor, which is basically adding levered Bitcoin exposure. Imagine that they are putting Bitcoin collateral and lending against, taking a loan against it to buy more Bitcoin.
Yep.
This is very similar to being an MSTR shareholder.
Yes.
But with the distinction that when you are an MSTR shareholder, you don't take that collateral liquidation risk. Now, I know that Coinbase and I think potentially Strive are working on removing that liquidation risk as well, which makes it even to some extent a bit more comparable. But I think the profiles of the investor that puts Bitcoin as collateral to take a loan and invest back in Bitcoin is quite similar to the profile of the investor that is an
MSTR.
MSTR shareholder being able to issue digital credit. But your point is right as well, that in fact, it seems like a competition. And I think that is why there is a critique arising, in fact, of the MSTR, because it feels like it's a competition. And in fact, it's different because, as you said, if you are an MSTR shareholder, this is a security. This is a share in a publicly listed company. This goes into brokerage accounts. This goes into institutional allocations. And this is broadening the market and not taking into the existing Bitcoin self-custody market. And so the point was, I think the critique arises from this because it seems like MSTR takes a lot of the attention in the market, while in fact it's bringing more attention in the overall Bitcoin market, and that a lot of shareholders that I know may have started with digital equity with MSTR or other Bitcoin treasury companies, and over time they also have different types of strategies in the Bitcoin ecosystem. So it's the perpetual discussion between how to split the cake or how to make the cake bigger. And my view is that Bitcoin treasury companies make the cake 10 or 100x bigger. So
that makes more sense to me. It's like if somebody has $100,000, they have a choice and they want leverage Bitcoin exposure. They have some options available to them. They can buy a leverage ETF. They could buy what they call digital equity in some kind of Bitcoin treasury company, some accumulation machine. They could buy spot Bitcoin, get a loan against that Bitcoin, and then buy more Bitcoin. These all have different trade-offs and risks. And what we're talking about is like getting leverage exposure to Bitcoin, right? So you have that bucket in your mind. And so it's just important to understand those different risks because, as you say, MSTR doesn't have, a liquidation threshold, margin requirements and these different factors. And especially compared to these leverage ETFs where they could really poorly track the underlying. It's not exactly perfect and they're expensive and different things like that. So I think that's actually the right framing to think about these things and the different trade-offs with them. But not everybody using a Bitcoin-backed loan is for, they're not all just trying to lever it up with them. I don't know what the percentages of users of Bitcoin-backed loans are doing things like that versus just, getting liquidity based on their long-term savings. That would be a better question for the Strike fellas or Ledins of the world.
That's a good point, Sam. I think Ledin does ask that question, what you're using it for. I'm really curious. That's a good point. Like what is the main TAM using it for? Is it family life, operational expense, big purchases? Is it to lever up? Anyway, I'm curious about that.
Yeah, I would think it would be the first bucket is the majority, but maybe they're more degenerate.
Yeah. I'm sure there's ample degenerate behavior happening there. So
yeah,
for sure.
I don't know.
The whole point in my view is that the market for shares in public markets and the market for credit in public markets is 97% of all of the allocatable capital in the world. And so this is a much bigger market. And you just cannot live closing your eyes and not seeing that market. If you are a true Bitcoin maximalist, the rational thing to do is to look at that reality and structure a corporation or be a shareholder of a corporation that can access to that opportunity But at the same time, that's why it's also healthy to have that debate in the community. And we remind it all the time, nothing replaces Bitcoin and nothing replaces self-sovereignty and so on. So, risk reward.
That's
Risk
for sure.
reward.
Yep. On the lighter side, and I know we've blown through the top of the hour. I want to be respectful of the guys' time. If you need to drop, that's okay. But just real quickly, World Cup fever's sweeping the U.S. here as the U.S., Canada, and Mexico are hosting the World Cup. We're all got the privilege of our respective squads sitting atop their groups. France, sitting on 6 points. The U.S. sitting on 6 points, and Brazil on top of their group. And I wanted to just kind of tease what you guys are doing with your BitCopa initiative. Maybe you guys can take it away, what Orange BTC is up to with the World Cup and why we should be rooting also for Brazil, no matter who our team is, if we're Bitcoiners.
Yeah, I mean, this is just a campaign we're doing. Obviously, the World Cup is a huge deal in Brazil. They love their football down there. And so we're buying a Bitcoin for every goal that Brazil scores. We're giving away jerseys. We're kind of leaning into that because it's important for the country and it's important for us to just keep accumulating Bitcoin. So it's just a fun little campaign we're doing. And so we can root for Brazil because every single time they score, we're buying. So I hope they score 8 goals tonight against Scotland.
Why so low, Sam?
8? I don't know if I've heard of it going to 10, but I don't know. The
Sure.
Scots are making noise too. I don't know if you guys have heard about them, the fan base there. I guess Miami's completely overtaken by Brazilians and Scots right now. So I actually wish I was at the game.
In my market in the Boston area, they, it was crazy when they're ahead of their game that they played in Gillette Stadium in Foxborough, and the Scots were all around town celebrating in and out of the bars. They showed up at the baseball game at Fenway Park, the Red Sox game. The Red Sox are in last place, but they made Fenway a destination at least for a few days. So good to see that. Exciting.
Did you see they drank all the beer? Did you see that?
Yes, yeah, I did.
Tyler, I think would be good, Nick, if you could tell us where are you with BitGo? What are the latest at BitGo? I think you've been one of those leading infrastructure players in Bitcoin, one of the most important ones since the beginning for also the financial adoption of Bitcoin and the institutionalization and so on. So I'd be keen to learn more about that.
Oh yeah, thank you, Alex. By the way, Sam and I are going to be at the England-Panama World Cup game on Saturday as well. BitGo has like a block of seats there, so we're really excited. By the way, if you guys are in New York, Tyler, Alex, you guys got to hit me up. We got to go to one of those games too. But so in terms of BitGo, yeah, thank you for the question, Alex. A lot of people don't know, but Mike Belshi, the founder of BitGo and our CEO, he actually was the innovator of 2 of 3 multisig. When multisig first came out, there was a lot of debate on like, do you do 5 of 6? Do you do 2 of 3? Do you do 2 of 2? Like, there was a lot of that debate. And but Mike was the one who popularized the 2 of 3, created the first custodian and wallet infrastructure at the time in 2013, which was the launch of BitGo. And here we are today. We're a company heavily focused on Bitcoin. I will make that distinction. Mike, our CEO, is a Bitcoiner. Obviously, I am. Most of the company is. But in general, we support stable coins too, the general digital asset community. But yeah, so I mean, you kind of said it. We're the infrastructure provider. We're the picks and shovels. So it's like your favorite brand's favorite brand. Just to kind of steal from the big White House UFC card, they say Justin Gaethje, who won that main event, is your favorite fighter's favorite fighter. I feel like BitGo is your favorite brand's favorite brand. I could name a ton of people in the industry that essentially use whether it be our custody, our wallet technology, our mints and burns for stablecoin launches. We've recently partnered with SoFi. We were responsible for USD1, which is the World Liberty, the Trump Organization stablecoin, and so on and so forth. So we've made it our mission that if anyone is getting into this space at the institutional level, whether it be banks, US Bank is a client of ours, et cetera, they come to BitGo to not only get educated, which is really important. So I wanted to kind of attach myself to what Sam said there. A lot of the job in this space is still education on top of the launching of products, of course. But we're just really happy to have both the global regulatory infrastructure, the technology, where half the company is R&D, and obviously being ideologically aligned with everyone. Obviously, Oranje is a client of BitGo's from a custody standpoint, and several other of these treasury companies. And we have our own treasury as well, because we believe in the mission. And so, our goal ultimately is to accelerate this transition from like traditional economy to a Bitcoin digital asset economy. And that's what we wake up every day throwing on our World Cup jerseys trying to accomplish. And so really, really excited. I feel like this is probably the biggest opportunity this industry's had this period right now. It doesn't always feel like that in a bear, of course, but as I think a lot of Bitcoiners like to say, we continue to build in the bear, and I'm really, really excited for this next cycle.
Yeah, it's been really exciting to track you guys, shooting up the Treasury leaderboard at bitcointreasuries.net as well, being the player behind the curtain who's providing a lot of that infrastructure. How big of a deal was it, Nick, going public with BitGo? Like what's that meant to the team, and how has that helped you reach new clients?
From a new client perspective, certainly a lot of inbound. I feel like that transparency of being public, as well as all the regulatory stuff, is a additional layer or lever where maybe someone was always trying to go with a Coinbase for custody because they're like, they're public and that we just trust that. Big companies have certain mandates to follow from their board and investors. Now we've eliminated that by being public. And I guess I haven't had a chance to reflect as a company or as our team what that means. For me, I'm more excited about the fact that, like, same thing with the treasury companies coming online. It's like, what does this mean for the industry? You had the miners and you had some exchanges go public in the last several years, but BitGo's the first true infrastructure provider that went public. We have really, really sticky revenue just because of our model. And like I said, we're always launching new products because of our robust R&D department. And so I guess to me, it's a sign of the maturity of the industry. As more and more of these like grown-up companies, I keep the boys versus men comparison to Alex say keeps sticking with me. But as more of these like grown-up companies start coming live and actually being here for the long term, it just feels like the mission is slowly being accomplished, which is exciting. And then, I also a couple weeks ago, BitGo was named within the first 5 months of going public. We were named to the Fortune 500, which is number 273 roughly. So I think between us and Galaxy and maybe I don't think Coinbase was on it because they use net rev, not gross rev when they measure. But I think it's just Galaxy and BitGo as the only Fortune 500 companies in the space. There might be one or two more. Sorry if I'm forgetting those, but anyway, really excited about that designation.
What a great
Cool.
example of grassroots Bitcoin adoption, invention of multi-sig to a free and public equity. So to our prior discussion, I think it's a great example of how all of this is complementary and it's just providing more options in the market and more value to Bitcoin overall. So congrats.
Thank you. Yeah, and excited to work with everyone. Yeah.
Great stuff. Yeah. Thanks, guys, for hopping in. We ran a little bit longer today. Make sure you subscribe. If you want more of this content, to the BitcoinTreasuries.net roundtable. For Sam Callahan, Nick Payton, Alexandre Laizet, I'm Tyler Rowe. And don't forget to stay orange.